After reporting somewhat lower than anticipated Q3 numbers, Tesla stock is down 6.25%. Are Q3 results that bad? Revenue from automobiles increased by 28% year-over-year in Q3, so Tesla's third quarter earnings weren't too bad. Despite short-term setbacks, the corporation as a whole earned record sales. Tesla's Q1 2023 revenues were $18.69 billion, up from $12.06 billion last year and $14.06 billion in Q2 2022. Tesla revenues are growing 55% year-over-year and 28% quarter-over-quarter. What other company can report such results when the global economy slows? In Europe and China, Tesla holds a market share of less than 2%, whereas in the United States, it holds a market share of about 3.5%. Therefore, Tesla has ample opportunities for expansion. The automotive division's gross margin for Tesla was 27.9% in the third quarter, down from 30.5% in the same quarter a year ago. However, the fact that Tesla has an operating margin that is more than double the norm for the auto industry is conclusive evidence that the company is, in fact, a technology company and not just an automaker. Can growth continue? Musk reported a massive surge of resumes from top-eye engineers and scientists when announcing Tesla's third quarter profits. Since an organization is its people, processes, and technology, talented people will naturally gravitate toward the most successful ones. Talented employees succeed because a firm is its people, processes, and technology. The FANG companies Facebook, Amazon, Apple, and Google are great examples of how hiring top talent organically decreases recruiting costs. Tesla risky. Tesla faces strong competition. The Ford F-150, the U.S.'s best-selling vehicle, is electric. Tesla copycats, like Lucid LCID, also attract premium car buyers. Other automakers are following Elon Musk's Kulev trend. China has Nio Xpeng and other Tesla-like EVs.